Infinite banking is one of the most powerful strategies for building wealth when it's done correctly. But too many people make simple mistakes that can cost them time, money, and results. Let's talk about the common pitfalls people run into with infinite banking, and most importantly, how you can avoid them. What's up, guys? I'm Shawn King, infinite banking practitioner and founder of Legacy Life and Retirement. If you're new to the channel, welcome. I help people understand and implement infinite banking and how they can utilize it to take control of their financial future. And today, I want to share the most common mistakes people make with infinite banking, show you how you could set yourself up for success with your policy. Let's go ahead and hop into it. So mistake number one is going to be underfunding your policy. Your infinite bank only works if it's properly funded. Otherwise, you might as well have some plain old off-the-shelf whole life policy, which is better than a lot of other out there, but that's not what we're looking for with infinite banking. So let me go ahead and expand on that. Underfunding your policy significantly slows the cash value accumulation, reducing your ability to leverage the system for borrowing or compounding growth. Think of it as planting a tree. If you don't water it adequately in the beginning, it won't grow strong enough to bear you fruit. Next up is committing to the strategy. Now, a properly designed infinite banking policy is going to be tailored to your specific budget and goals. Skimping on contributions can lead to what I would call dissatisfaction with the results, making you feel like the system isn't really working. And if you feel like your banking system isn't working, what do you think you're going to do? You're probably going to stop banking. Now, a study by LIMRA highlights that consistent contributions to whole life policies can lead to substantial growth over time, creating a reliable source of liquid cash for policyholders to utilize. Now, you guys, I really want to stress this point. You have to think of your infinite bank as a business. It needs capital to grow. If you underfund it, it's like starting a business and not putting enough money in it for you even to succeed. You're basically saying,
hey man, I've got this future money printing machine, but I don't want to pay for the electricity to turn it on so it can print me my money.
Come on, man. Consistent funding is key to unlocking the policy's full potential. All right, now, mistake number two, treating it like an expense, not a banking system. You see, your properly structured participating whole life policy built for infinite banking is not a bill. It is a legitimate wealth building tool. You see, a lot of people treat premium payments as just another expense, instead of understanding that these payments build your cash value and generate long-term benefits. It's all a mindset thing. If you can rethink your thinking, you're going to be in a good spot. You see, the cash value in a properly structured policy grows tax deferred and remains accessible through loans, making it extremely dynamic and valuable than a traditional savings account or a lot of other retirement accounts out there. According to my mentor, Nelson Nash, he states in his book, Becoming Your Own Banker, the key to becoming a successful infinite banker is shifting your mindset. Instead of thinking about it as spending money, think about it as growing money. Everyone would love to be able to grow money. I wish I had a money tree in my backyard. Well, luckily for you, that's exactly what you're learning to do here, except that tree is a printing machine. I'm going to give you guys a example. It's easy to think of premiums just like another expense. We know that money's going out, but what you're really doing is creating a financial system that works for you, something banks have been doing for decades. When you pay premiums, you're essentially paying yourself. So think about it like that. Me paying me. All right, mistake number three, this is a big one, guys, is misusing your policy loans. Policy loans are extremely powerful, but only if used correctly. Many people assume that the policy loans are just free money while you're out there borrowing against your own cash value. Interest still applies, and failure to repay loans can erode the policy's long-term value and growth. So remember, you want to play good banker. Now you may be asking yourself, but Shawn, what does that mean? You want to use loans strategically for things like investments or debt repayments or opportunities that can generate returns. Avoid using your loans for unnecessary spending like, I don't know, balling out in Vegas with the boys, maybe doing some sports betting, something like that. Now, some people take loans out without a clear plan for repayment, which I think can jeopardize the long-term value of their policy. Because remember, the policy loan is a tool. It's not a handout. Plan ahead, make it work for you. That's my best advice. Mistake number 4 is really a lack of long-term vision. Nelson always says in his book, think long-term. That's because infinite banking is not a quick fix. It's a lifelong strategy, which means patience is key, my friends. Infinite banking takes time to build momentum. Policies typically reach their peak efficiency after several years of consistent contributions. Now, again, it all depends on design and how you're utilizing it, but the more you use it and play good banker, the faster that process can happen. But those expecting literally overnight results, well, you're going to be discouraged and you might abandon the system, which is guaranteed to work, hence the guarantee. So I think one of the most powerful aspects of infinite banking is its ability to transfer wealth across generations. A well-maintained policy can not only fund your kids' education, it could help them buy a home, or it can act as a financial safety net for those unexpected expenses life always seems to throw at us. I think you know what expenses I'm referring to. So research from the American Council of Life Insurers, ACLI, highlights how whole life policies, when maintained for decades, provide unparalleled stability and growth compared to basically all other financial vehicles. So a quick example, like I said before, some people expect instant results. If that's you, go back to the drive-thru, keep throwing stuff in the microwave. Almost instant liquidity is one thing, and we can definitely discuss how we can make that happen, but instant results are not real. Infinite banking is about building a system that grows and compounds over time. It's about creating wealth for generations, not just tomorrow. Patience, consistency, and continuous compounding interest are your greatest allies on your infinite banking journey. So let's do a quick recap here. Infinite banking works, but only if you avoid these common mistakes. Fund your policy properly, treat it like a wealth building tool, the wealth building tool that it is. Use loans responsibly and keep your eyes on the long-term vision. If you can do those things, my friend, you are going to end up a very successful banker. And bankers don't seem to have money problems. So if you guys want to learn more about the infinite banking concept and how you can personally start your own policy, then go ahead and check out the link in the description or comment the word BYOB. By clicking that link in the description, you'll be sent over to my website to check out a free infinite banking overview, which should answer most of your questions. If you end up having more questions, which is totally cool, I like questions, or if you decide that you're ready to get started, go ahead and book yourself a free cash consultation call on the homepage of that website, and you and I will be scheduled personally to have a one-on-one sit down. Don't forget, as always, to like this video, subscribe for more financial insights, and share this with somebody that you believe needs to see it. As always, my friends, the information is free, the knowledge is priceless. I'm Shawn King, and I'll catch you guys next time.